Okay. I'm checking the mic. Make sure it's on. 1, 2, or 1, 2. It's on. All right. They say third time's a charm. All right. Here we go. Welcome, welcome, welcome. Welcome to another edition of DebtAintMyDaddy. I'm your host, LJ Young. Welcome. All right. Hello, Mark. Perfect. I hope so. I got to get on my stuff, man. I'm so excited to come on and do videos. I'm going to be checking to see the blinking light is on my mic. So now it's on too. And now it's on. A 1, 2, a 1, 2. All right. Check, check. Mic check. All right. For those of you that are new to my channel, my name is LJ Young, and I am a 100% debt-free motivational speaker and personal finance educator. I help people become financially free by helping them financially see what I call outside the debt matrix. The debt matrix is a place where everybody believes in credit and debt and believes in financing things that depreciate. Depreciation means things that go down in value. Okay. 85% of Americans live in the debt matrix. Whether they notice or not is 100% irrelevant because math doesn't care about people's feelings. Thank you, best version. Thank you. Okay, thank you, Mark, for that check. Thank you, thank you. All right, let me bring my notes up because I want to stay on task about this series, all right? Now, first of all, I want to thank everybody for the comments, the donations, the emails telling me, hey, man, I saw you on O'Shea. I just saw you on YouTube, man. I'm so glad I came across your channel. Man, I want you guys to understand how important, how wonderful that makes me feel because I look at it this way. Total strangers that don't even know me are telling me that. That's how I know I'm doing it right, okay? I make this so simple. Search YouTube, search it. I make this so simple using just 5th grade math. So when you come to my channel, you're like, man, you're like, that's so simple. That can't be true. It's so simple. You'll look at it, you'll be like, it can't be that easy. There's no way it's like that. Because you know why I say that? That's exactly what I said when I decided to become debt free. I was like, there is no way it's that easy. Yes, it is. This is your channel. Welcome. This is the safe zone where you can say, hey, Linnell, I don't know what that means. You come here and say it. Hey, that tells me that you want to know by saying you don't know. You guys have no idea how many people in the debt matrix are fooling you guys. I promise you, they're fooling you. Too afraid to say, hey, I really don't know what that means. And then they just spread the non-knowledge. Okay. All right. Please don't forget to like this video, subscribe, hit the reminder button, share with people that are ready to hear what I teach, okay? They got to be ready, else they're going to think I'm crazy, even though I'm just using math, okay? Nothing fancy, just math. I'm just using math. I'm not special, okay? They might think I'm crazy because it's so simple. All right. I want to make sure I answer the questions at the end of this video because this particular video, Life After Debt series, is specifically for people that have made the sacrifice to get to zero. They know exactly what I mean. They got out of the red, getting out of the debt matrix into the 15%, 85% of Americans are in debt. 15% of us are not. They're out of the debt matrix, now live amongst the 15% of us that are financially free, okay? They did what it takes. They took the years because they know it's not instant. I'm welcoming you guys here. You understand what it took to get out of that, to get to zero. Welcome. Okay. Now you're out of the debt matrix. You're new, just like a newborn baby. You're thinking, now what, Linnell? This is for you because now you understand there's two languages when it comes to money: debt and debt free. If you've been in debt all your life, you only speak debt. I promise you. You come out now, those of you that have sacrificed the years it takes, the sacrifice that it took to get out, now you speak both languages, debt and debt free. Now that you speak debt free, they can't hear you. I'm talking to you guys. This video is for you. That's why I'm saying for those of you that are not debt free, you probably won't even understand what I'm saying. That doesn't make sense. What do you mean? That's because you only speak debt. Okay. So in this video, I'm not going to explain what that is. I'm just going to talk that way so the people that understand the language will relate so they'll know what to do from here. Okay. All right. I'm staying on my notes here. Now, this series is called Life After Debt, the Collective Average. I'm only talking to the people who have sacrificed to become financially free. I'm only speaking debt free from this point on. So you guys are the only ones that's going to understand and relate to what I'm saying. This is very important for you. This is very important for you to understand. The majority will not understand what I'm about to tell you. All right. You guys now understand that financial freedom doesn't mean you have to be rich. It just means your finances are above zero and above. Now you understand you're free. Welcome. You're free like me. Your finances above zero. Have you noticed life is really not that expensive now? It's not even that expensive. It was only expensive because you're in debt. See that now that you're not? See how easy this is? It's not even, life's not even expensive at all, is it? Exactly. But the majority can't see that. People in the debt matrix cannot see how easy life is right now. And they can't hear you even if you told them, they won't hear you because they only speak debt. So stop trying. Stop. This is what you do. This is the best way to control from getting upset when you try to tell them, hey, just put math against your finances and you'll be free. And then they don't get it and you'll get mad because they don't get it. Never forget this. You were in the debt matrix just like I was, and you spoke and talked the exact same way they did. Okay. I promise you, there were people like me outside the debt matrix talking to you when you were in the debt matrix. You didn't hear them either. You just kept doing everything everybody else was doing. Okay. So don't get upset. You just go, okay, get used to that word. Okay. That's all you got to say and just walk away. Okay. All right. Understand this whole economic system, somebody designed it. The more you're on this side, you will clearly see somebody designed this. Some family, some person, somebody designed it and made it. This is what they did. Made it so simple that it's undetectable. It's just the math we used in 5th grade. I've just learned from a 6th grader, a recent 6th grader, the math I'm teaching you guys, the telling you about savings minus debt equals your real money. This 6th grader told me he learned that in the 2nd and 3rd grade. Now, I can't tell if they're pushing it further back in school so that people will forget it. The older they get, the faster. I don't know, but they learned it in the 2nd and 3rd grade. Take that. All right. All right. Have you ever hear the phrase, the average? Like the average car loan is this, the average student loan is that. Like, let's see. Better yet, let me put it this way. The average, when they talk about the average car loan is this, the average mortgage payment is that. They're talking about millions upon millions upon millions of people making the same financial mistakes over and over collectively. Okay, that's the average. Understand, you're no longer part of the average. You're no part of the collective. You remember the Star Trek movie First Contact? I'm going to put a link in here. So just in case some of you guys don't even know what that means, I'm going to put it down in the description so you can see a clip of what I'm talking about, right? Star Trek First Contact, I am the Borg. All right. You guys can YouTube it if you want to right now. The Borg is the collective. Okay. So in our case, when you hear the phrase the average, they're talking about the average is the collective of people in the debt matrix that do the same thing, make the same financial mistakes, do the same financial things over and over and over again, in the collective. Okay, that's them. You're no longer part of that. Check it out. So, like for example, student loan debts in the trillions, car loan debt in the trillions, credit card debt in the trillions, mortgage payments, money in the trillions. Those things are no longer your concern. You're no longer part of that stuff in the trillions. That has nothing to do with you. That's part of the collective, the average. That's those people that believe that in there. That's their problem. You're no longer part of the collective. You're part of the 15% of us that are financially free. Do you understand? Okay. And I'm gonna give you some examples so you can better understand what I'm saying. I'm only talking to the people that are financially free, and now they're at zero. Now they're saying, now what? I'm only talking to you because you're the only ones that can understand what I'm saying. But when it comes to money, I want you to stop thinking individually, and now I want you to start thinking collectively. Okay? And this is what I mean. You're no longer part of the collective, but you're thinking collectively when it comes to money. Here's some examples, okay? In this example, this is called phantom income. This is only one piece of it. It's not the whole thing. It's one piece. All right, listen closely. The reason why it's called phantom, it's only phantom to those in debt. Okay? It's mathematically impossible for the people in the debt matrix, the people that are part of the collective, to understand what I'm about to tell you, share with you, okay? When you hear the word the average, remember, you're not part of that, but I want you to listen when they say the average. So when you hear the average student loan payment, let's just say like this. These are examples. The average student loan payment is $400 a month, okay? Times that by 12, that's $4,800 a year, okay? The collective pay that. Over here, outside the debt matrix, now you make $4,800 more per year than the average, than the collective, than what they're paying. Do you understand what I just said? Here's another example. The average car payment is $550. Because we don't have student loans and we don't have car payments. Do you understand? But the collective do. So the average car payment is $550. You times that by 12, that's $6,600 a year. We now make $6,600 more per year than the average. Do you understand? You must always think about your money collectively. Hello, the Scott. I'm gonna say, William, I'm gonna save all the questions towards the end of this particular video, okay? I don't think I'm ignoring you. Now, let's move on. This video is especially for the people that are out of debt. They are at zero. They are wondering what to do now. I'm speaking to you, okay? Market value of almost anything no longer matters to us. The market value of a car, house, property, that means nothing. That only means something to people in the collective, in the debt matrix. I'm gonna give you a couple examples so you can understand. Buy cars. Now, when you want a car, you only buy a car from those in the debt matrix. They need the money. They will always need the money. Do you understand? They're in debt. Whether they notice or not is irrelevant. Math doesn't care how they feel about it. 1 + 1 is always going to equal 2. It doesn't care how somebody feels about it equaling 2. Do you understand? That's real. All right. So for example, you buy a car from somebody in debt. You buy that car under Blue Book. You drive it for a few years because they're going to take the money. If they're off, say like the car is 15, you come with 10, 9, they're going to take it. Why? They're in debt. They need money. You give them that. You buy it under Blue Book. You drive the car for a few years. When you get tired of it, guess what? You sell it at Blue Book. When you sell it at Blue Book, guess what? You drove the car for free. You see what I did? You buy it under Blue Book, drive it, sell it at Blue Book. Now you drove the car for free. The people in the debt matrix cannot see that. Another example. As long as there are people, and there are millions upon millions of people in the debt matrix that believe this, as long as there are people that believe they're homeowners when they have a 30-year mortgage, you won't ever have to worry about the current housing market prices ever. As long as there are people that believe that. Matt, and don't enter your feelings into this, because all they have to do is use math and clearly find out that they're not a homeowner. It's not really that difficult, but they're refusing to see it. It doesn't matter. Conditioning, it doesn't matter. That part doesn't matter to you anymore. You don't buy housing market prices no longer matter to you. When the economy crashes, that's going to be Christmas for you. Imagine if you were out of debt with money in your pocket back in 2008 when the crash happened. You would have bought up your whole block for pennies on the dollar. Easy, just like that. It would have been Christmas time. Economy crashes, it's Christmas time for you now. That's not a bad thing. Believe that. All you got to do is think about it right now. Think about how you're listening to me speak, thinking about how your financial world is now that you're out of debt. Imagine if you were like this back in 2008, it would have been Christmas time. You would have bought up the whole block, easy. Wait till it come back around, because it always does. It's not staying. They're not making any more land. Land is here. Nobody can make more. It's going to come back. Okay, you just got to wait. And when you ain't got any debt and the houses are paid for, you don't care how long it takes to come back. You just wait. Pay the taxes. Paying taxes every year ain't nothing when you're financially free. That's nothing. They can't see that. If this is what you must do to make sure you keep your feelings out of it. Never mix your feelings with your money, because this is the facts. If everyone knew what I was telling you, there would be no one left to finance cars, motorcycles, furniture, washer and dryers, stereo systems, you name it, everything that goes down to depreciate. We need those people. Buy one, get one phone, buy one, get one free cell phone. They believe all that's free. They believe in financing things that depreciate. If they didn't do that, we wouldn't be able to continue to live as comfortable as we do. It's nothing personal. All you got to do is use math. See what I'm saying? So that way you start to feel bad, because you'll see them doing these things, right? And you just want to tell them, you want to say, hey, this is the reason why you're not getting financially ahead. You keep doing this. They're not going to hear you. We need those people to stay. We need those people to stay asleep in order for us to remain rich, to remain wealthy, to remain financially free. That's a must. If they knew what we knew, there wouldn't be nobody left to finance depreciating objects with interest. It wouldn't be nobody left. Do you understand? Now you're outside of the collective. They must choose to believe. They must choose to believe math the same way you did. That's how you got here. And here's the simple formula. It's so simple. Let me tell you. And for those of you guys listening, I'm going to slowly switch over my debt ain't my daddy, because that can be interpreted in many ways. Excuse me. Sorry. That can be interpreted in many ways, like sarcastic, who you, I'm going to slowly phase into this. Savings minus debt. The reason why that is, I'm going to go, because savings minus debt will give you the answer to anything. Hey, can I afford that car? Add up all your savings, add up all your debt. Savings minus debt equals how much money you have for a car. If it's in the negative, the answer is no. Do I have the money for a house? Savings minus debt equals how much money you have for a house. If that number's in the negative, the answer is no. It's really that simple. It's not really difficult. See how easy that was? It's that simple. And that applies to everything. Everything. And now understand this. Your credit report is now your ammunition to vet anybody that tries to come into your life financially. Anybody. Their credit reports will never look like yours, nor will they understand. And if you want to, your credit report should look exactly like mine. For those of you that have not seen it, go to Facebook/DebtAintMyDaddy. I have my full entire credit report posted. You understand that I'm not talking about my credit score. I'm talking about my entire credit report. So when you're ready to invest now, whoever the investor you choose, you better see their personal credit report. If their credit report doesn't look like yours, you better not use them. If it's time to pick an accountant, you ask to see their personal credit report, because they're trained to balance book. If they know how to balance a business's finances to zero, they damn sure should better know how to make their own personal finances to zero. Ask to see their personal credit report. If it's not like that, if they have student loans that are older than their children on their credit report, you better not use them. Not saying that they don't know what they're doing. They might be really good at what they're doing, but you got to remember, if they don't know just the basics of what I'm telling you, they're missing a major piece. Whether they know this or not is 100% irrelevant. You do not use them. Same goes for a tax person to do your finances for your taxes. If you see their personal credit report first and they got IRS debt on there, or they're in trouble with the IRS, you better not get a person like that to help you do your taxes. You better not do that. That doesn't make sense. You got to stop and think. Why are you in trouble with the IRS and you do people's taxes? That doesn't make sense. You better not use them. Those same type of people, I guarantee you, there's accountants, there's investors just like me that understand Savings minus debt equals how much money you have in real life. Can you imagine those people? They're out there. Can you imagine how frustrated it must be for them to get people to use them, and why? Because they can tell you all day long, but if you don't understand the language of debt free, you can't hear what they're saying. You don't even know. You get it? Please take that, think about it, sit on it. If you have any questions, you want that free 30-minute consultation, DebtAintMyDaddy@gmail.com, and schedule yours. I'll schedule it for you. All right. I'll put you on the calendar. All right. Please don't forget to donate. If I've changed your life in some way, hit that donation link and put in a note of what I've done for you. That's the fuel that keeps me going. Not specifically the donation, but that I moved you enough to say, hey, I'm going to give you $5 and this is why. That's all. Nothing. Okay. All right. I am at the end of the video. For those of you that came for the meat of the video, you guys can cut out right now. That's it. I just want to give you those nuggets of information. Now I'm coming outside of the 15%. Now I'm going to talk to everyday people to help them understand maybe anything I said. Maybe they want to know something. I don't know. Know some things that you don't know, and you're ready to come on over. DebtAintMyDaddy@gmail.com. Schedule up. Free 30-minute consultation. All right, let me read some of these things. Can you speak on not worrying about charge-off credit and collective debts versus paying off active credit and student loans first? All right, William. For example, if I created a plan for you, things that are in collections and charge-offs, those are the last things on the list to take care of, because they're already in collections and charge-offs. So you might as well just leave them to the end, because they can't really do more damage than what they've already done. You'll get to them, right? Active debts and student loans are always paid off first, because especially student loans, you'll die with them. Okay. Understand that you will die with student loans. You will be paying student loans with your Social Security check if you don't pay them off. Student loan debt is only second to IRS debt. I want you guys to clearly understand that. All right. Consulted. This would only gain me closer to my goals. Thank you, Scout. Much appreciated. I really appreciate it. DTN Professional Window Cleaning. Hello, sir. What's good? I guess I am your uncle, man. I got to go ahead and face it. I am 20 years older than you. I'm cool with that title. I'm cool with it. Ulysses. Oh, yeah. Pawn shops are full of best version motivation. You're right. That's where I shop. I shop at pawn shops. I do. Have you noticed those pawn shops are getting fancier and fancier? You know why? Because more and more people are pawning stuff. It's not a secret. All you got to do is look and see what's happening and do the opposite. You see the pawn shops growing and getting fancier and fancier because more and more people are in trouble. They're just pretending like they're not, okay? But those pawn shops can't be lying, all right? So you just go, oh, they're doing something wrong. I'm not going that way. You do the opposite. You guys want to be rich? Do the opposite of everything everybody else is doing. All right, let's go on here. I asked the guy at work. This is from Mark. I asked the guy at work what his loan amount is. He gave me, huh? What did I tell you, Mark? Are you using those tests that I told you about? You see them? You say, huh? They're going, huh? What are you talking about? See what I'm saying? You're no longer part of that, Mark. Outside the debt matrix, we don't speak debt. That's debt. That's why he's going, huh? You're speaking debt free to him, Mark. That's why he's going, huh? What you saying? All right, people will consciously continue to make outrageous debts decision buying. That Ulysses, they don't know. Okay, they don't know. So you got to just accept it. If they knew, think about it this way, Ulysses. If they did DTN, for you guys are looking for who Ulysses is. Ulysses is a DTN professional cleaning. You got to remember, if they knew they were doing it, they wouldn't do it. That's how you always got to look at it. All right, let's go. Mark had some coworkers who worked overnight to meet a deadline. Gotcha. Okay. Like what? Pay off smallest credit card first as per. Yes, William, the snowball effect. Smallest debts, not just credit cards. You put them all in order from smallest to the largest and pay them accordingly. That's it. That's it. I promise you, it's really that simple. This is best version motivation. Yeah, the lines are full of people making payments at the full full. All you got to just like, for example, say like this. Hey, best version. Check it out. Like when tax time come around, the businesses are like, people that are happy about tax time don't realize they're in the debt matrix. They don't realize that's just money that they've already worked for. They just gave too much money. They just gave too much of their money to the government during the year. And at the end of the year, the government just gives it back to them. They just say, hey, you gave us too much. Here you go. But the people that believe they're getting something from the government, whatever, as long as they believe it, it doesn't matter. The businesses put them in this pool. And then imagine the businesses on the edge of this pool with fishing poles, and they're just like, hey, shop here, tax time, put down payment on this, buy that. And people are just happy. Ooh, I'm going to buy it. Only people in the debt matrix talk like that and think like that. They brag like that on Facebook. Hey, I can't wait to do it. I got that income tax check coming. They're saying it out loud, but they don't know what they're saying. That's why if they knew what they were saying, they wouldn't announce that they're happy about an income tax check return on Facebook. They wouldn't do that. They wouldn't tell their friends, but they get together as the collective and they all talk about the same things as one. They're part of the collective. They don't know, whatever. You just got to go, okay, whatever. Of course, strip clubs getting fancier too. Hey, 2 jobs. They're going in there finding love. They're looking for love in the strip clubs. Okay. Hey, and I'm sure, and you know what? I'm telling you this. I've never been a strip club type of dude. I was always envious of the women in the strip clubs because I remember at 18, I went to my first strip club, right? And I remember specifically going in there and I wanted to dance, right? And I remember waiting for a Prince song to come on because Prince songs was always long, right? So I said, hey, yeah, I want to dance and bring it up. So I knew, I was like, oh, she's going to be on me for a minute, just Prince. And they shortened it. I was like, what? And then she turned around and said, that's $20, $30. I was like, and that's it? And I said, I'll never come back to a strip club ever. And I never did because I was more envious of them because I was thinking, she danced on me for maybe a minute and a half and got $30 from me. In a minute and a half, I was like, I'm jealous. I'm jealous. She just gave me a fantasy and then took my money and that was it. I wasn't looking at her like, oh, who was that nasty strip? No, I was like, I'm jealous. This story made me feel better by having a roommate and renting a room to pay off my debt and stack my money. Made the last payment on. Oh, yes. Hey, check it out. Best version. Right here. If you told me what you were doing, I would know exactly why you're doing it. I'd have been like, oh yeah, I know why he's doing that. And check it out. Now, don't forget, best version. Now that your car is yours, you get to dictate your insurance. So what you need to do, if you have a $500 deductible, you call them and say, raise that to $1,000 because you got the money now. Okay. It doesn't matter. Trust your driving record. All right. And then you get to rearrange your insurance. Maybe you haven't had an accident in a year. Maybe you don't need full coverage. If the car wrecked, you could afford to fix another one. So drop all your premium. That's more money in your pocket. When you're financing a car, you don't get to do that. The bank tells you what kind of insurance they want on their car. Now that you have it paid off, now you get to dictate your insurance. That's more money, more money, more money. Make sure you get uninsured motorists. That's it. That's all I got. I got regular coverage. If I hit somebody, I got to fix my own car. But if I hit somebody, their car is covered. I got uninsured motorists. So if somebody hits me and run and don't have insurance, I got uninsured motorists. I'm good. All right, cool. You didn't have no insurance? Cool. Let my insurance company go after you. My insurance company pays me. That's it. All right. $1,000 deductible. You have money now. When you're financially free, you'll have the $1,000 if it ever happens. It's not even a big deal. Whatever. Okay. Platform is good for all people, especially young. This DTN, the first thing a lot of young people do when they get their first job is finance a car, or even after college. You know what, DTN, Ulysses? It's because they're part of the collective. They're plugged in. They're made to believe the student loans are forever loans. Okay. Hey, they're made to believe everybody has student loans. They're made to believe that it's okay to pay on your student loans your entire life. They're made to believe it's okay to have children. It's okay to have student loans that are older than your children when they start having children. No, it's not. No, it's not. That is not true. I'm going to give this example so you guys can understand how the bank thinks. The bank doesn't, what's the bank's job? To make money, not teach people about money. So check this out. I told this example the other day. If I was a bank and a person came to me, say like 20% down, they had good credit, good job, 20% down on a $300,000 house, that's $60,000, right? And they came and said, I want a loan. But they had $100,000 in student loan debt. All right. So I'm the bank. I have to determine this. Does this person really believe they have $60,000 in the bank? Or if they did the math, they're really negative $40,000 in a hole. 60,000 minus the 100,000 is negative 40,000. As the bank, I have to determine if this person knows they're either negative $40,000 in a hole, or do they believe they have $60,000 for a house. If they believe they have $60,000 for a house, I'm going to tax them accordingly because they don't know. Oh, you believe you have 60,000? Cool, whatever. This is the percentage rate I'm giving you. But if a person came in, same good job, $60,000 down and no debt, I would know that they know. I would not insult them with a ridiculous interest rate, nothing short of a conventional top rate mortgage. I wouldn't insult them because I would know they know. But the other people that believe they have money while having student loans, whatever, I'm gonna tax them accordingly. See how that works? See that? If you didn't see it, it's because you only speak debt. It's not, it's just math. Here's the glitch in the debt matrix. Okay. Math. Is my math right? If somebody came with $60,000 to put down on a house, but they're $100,000 in student loan debt, is 60,000 minus 100,000 negative 40,000? If the answer is yes, now the person has to do is believe it. See what I'm saying? That's the glitch in the debt matrix. But the majority of the people in the debt matrix don't really see it. They don't understand it. I'm not wrong. I didn't invent math. It was here before I was born. It'll be here after I'm dead. I didn't do anything. I'm not spectacular. I'm not nobody. I'm just telling you guys what it is. See how that works? The bank will know that you know. Like, for example, you know, normally the people in the debt matrix, they'll fill out a credit app and they'll cross their fingers and hope they get whatever they're trying to finance. Ooh, I sure hope I get it. Ooh, I sure hope I get it. When you're out of the debt matrix and you're going to buy a house, I already know, for example, I already know I have the money to buy a house, so I'm not crossing my fingers on anything. I'm going to walk in the bank and say, hey, bank, that's the loan I want. Because I've already seen all the requirements. So I met them. I just go, I meet that. Okay, here we go. What day am I going to get the loan? That's all I'm waiting on. I'm not crossing my fingers on anything. I know I'm going to get it. How do I know? Mathematics. It's not really that difficult. It's not, and that's the only thing I will ever not cross my fingers. That's the only thing I will probably ever get a finance is finance a house. That's it. But anything below a house, no, sir. I'm not doing any of that. Nope. Never. Here's another key thing. Never finance. You want to be rich? Never finance anything that depreciates. You'll be rich. That's it. See how easy that was? Did you guys catch that? Am I speaking too fast? I'll say it slower. If you started today, never, ever, ever finance anything that depreciates, you'll be rich. Just like that. Starting right now. Do it right now. Start right now. Best version. What is your take on having multiple bank accounts to spread out your money? Are you talking like, because I'm only talking personal finances. So if you're talking personal finances, I really don't see the purpose of that. I don't see the purpose. It's really not doing anything. Maybe you just want to break it up. I guess it counts on your situation. It only counts on how much you have. Like banks are insured up to a certain amount. If I had millions, I'd probably break it up like that because just in case if something happens to that bank, they'll only be insured up to whatever they're insured up to. And then because everything else I'd probably lose. So I'd probably break it up that way. But that's I don't really have to worry about that for quite a while. So I'm not really concerned about breaking my money up in multiple different banks right now. Okay. I hope that answers the question. Cool. Any other questions? Let's see. On the way we view certain debts that take years to recover. You know what, DTN? That's part of the conditioning. Okay. Because hey, what's up, Art? Welcome. That's part of the conditioning. And the conditioning is to believe that they see, like, for example, if they see $50,000 in student loan debt, if they see $100,000 in student loan debt, they see it as if they'll never pay it off. So they just put it to the back of their mind. And believe it or not, Sally Mae, the owners of the student loan debt, whoever, right? We truly don't know really who really owns it. But anyway, put it to the back. They want you to do that. They want you to put it to the back of your mind. They want you to put it in deferment. They want you to, yeah, go ahead and buy that house first. Come back to this, because they make more and more money from you from doing that. They don't ever want you to pay it. If I invested into the into student loan debt, I wouldn't want people to pay it off either. I would just live off the interest. I would want people to continue to call them forever loan. I would want people to be forever students. Like forever students, the majority of those students go because if they stop, those payments will become due, and then they have to pay them. Half of them probably don't even know how much student loan debt they have, so they just continue to go. And now the only thing they're happy about are the degrees they get. Hey, I got a doctorate in that. I'm a master's in this. The only thing when I hear people with multiple degrees like that, the first thing I want to know is how much student loan debt they have. Because if I knew they were $500,000 in student loan debt, I wouldn't care about their PhD, their master's, their bachelor's in this. I wouldn't want $500,000 worth of student loan debt. Hell to the no. Keep that. No, sir. I don't want any of that. You can't see that. Let me tell you something, okay? I had a client today. Lots of money. Okay? He made good money. Good money. Okay. This is today. Reached out to me. Hey, Linnell, I need your help. He understands that I could see through the facade. Like, this is what happened. When I showed him the formula, when I created his plan, right? And he could see. He could see like, oh man, right? He had so much money, but no money saved. Didn't have any money saved, but he made a lot of money. Okay. Now I asked him, I said, hey, to the outside world, because this person is a professional too, to the outside world, do you think those people can tell you didn't have no money in savings? He was like, no, they can't tell. Why? Because of your stuff, right? Of course. I said, but I can. That's why you're here. That's why you came to see me. I can see right through the facade. This is the gift you will have once you're financially free. This is the gift. The facade no longer fools people. Cars, houses, jewelry, Gucci this, red bottom that. That means those are things. Those things, when you're financially free on this side, those are just simple things. That's shoes. Like, for example, when I look at red bottom shoes, okay, I commend the owner of making people believe red bottoms are worth that. But logically, I understand it didn't cost $1,000 to make those. I know that, okay? That's just a fact. I mean, if you look at it and say, no, yeah, it didn't cost $1,000 to make those shoes. You just know that, right? That's how I look at everything. No different. Bentley, Maserati, the top dog Mercedes. I know it didn't cost that much money to make, nor would I ever pay for that. I wouldn't pay for that. But people in the debt matrix, if they believe it's that price, if I got a Mercedes that was worth that much, I'd buy it low from a person in debt and sell it to another person in the debt matrix that believe it's worth that much money so I can make money. Hey, you believe that car is worth that much money? Cool, I'll get it. Here, you buy it for that. Okay, cool. You know, somebody would say, oh, Linnell, why'd you pay that much for a car? Because I can sell it for double or triple. That's why I did that. See what I'm saying? That's how it works. It doesn't mean a Mercedes is really worth that much. All Mercedes has to do is make you believe it's worth that much, okay? Same thing with red bottoms, Rolex watches. It doesn't cost $25,000 for a presidential watch to make. That's not, if you believe it is, okay, cool. You believe it is. That's it. All right. Any other questions? For those of you coming in, this is after the main topic of life after debt, the collective average. Okay. This is the questions that people are asking after the main topic. I don't want you guys to sit in here and think, hey, how come he's not talking about the subject? Because that was earlier in the video. Okay. So you might have to stop and watch it as it posts or whatever. Any other questions? Any other questions? Oh, anything. I'm here. Schedule your, please do not forget to like the video if you like it. Please comment, share. Please do not forget to subscribe. Schedule your free 30-minute consultation at DebtAintMyDaddy@gmail.com. And I just came up with this for you guys to know. Some people might not want to necessarily become debt free. Some people might not necessarily want to involve me that deep in their finances. I do have hourly rates to where you might just want to call and get some information on what you should do on a particular situation, how to get out of a situation. Only on personal finances, I promise you, I will always have a mathematical answer for you. It's just going to be up to you to believe that answer or not, okay? The answer is going to make sense. I'm going to let you punch in the numbers on your own calculator so you can do it yourself, so you don't think I'm trying to fool you or do all that kind of stuff to you. If you need to speak for me for an hour, speak to me for 30 minutes, you might have your stuff ready to go. Like when you set up for that hour, have stuff ready to go. All questions, it don't matter. I'll have an answer for you mathematically, I promise. There's no tricks here. I have half hour and hourly rates. That's it. And you just want me to tell you something or give you the answer to something, I will always have an answer for you, okay? Did you decide on normal time yet? You know what? This is what I'm gonna do, best version. I am going to, like right now, here it's like, it's going on 8 o'clock Eastern time, which is 5 o'clock Pacific. So I'm gonna see how this works. See this little time area right here? And then I'm gonna do between the 9 and 12 time, like you suggested. I'm gonna try that. And then I'm gonna try, no, just these, and I'm gonna try the mid-afternoon time, like around lunchtime, maybe 12 o'clock, between 12 and 3, 12 o'clock Pacific, 3 o'clock Eastern, to kind of see, people are, towards the end of the day, people start to get bored or might not have enough work. So they start looking at their phones. And so they could watch me on their phones because everything is mobile now. So I'm gonna try the different times. Like right now, I see people coming in. I see 12 people in. And I've just really started. So I'm not gonna say that's bad. I'm just gonna say, because you got to remember what I teach, it's not really sexy. It doesn't sound complicated, so I must not be that smart. You know what I'm saying? He's just talking about basic math, not realizing that's all it is. But when the majority of the people in the debt matrix who's part of the collective, they believe it's something much more difficult and much more complicated when it's not. It's not. Morning is because O'Shea goes live at night. He is live right. Oh man, he's live right now, Bess. Oh God. You know what? You know what? There is no specific time with O'Shea, man, because I follow O'Shea too, man. He be popping up all random times, man. I don't know which one to pick. He don't have no specific time, okay? But he got it like that, okay? He got it like that. He can just pop up whenever. I'm speaking about whole different topics. He speaks about different topics. I speak about just money, personal finance topics. I want you guys to understand that how easy this is. And I'm a create my own time zone. That's what I'm gonna do. All right. I don't feel I'm like really competing against him. I don't feel like I'm really competing against anybody because I have a specific type of topic that's very rare that very few people can even understand. Oh, Alex, good question. When you email me for the 30-minute consultation, just give me a brief overview of your financial situation. That's it. Nothing more. Just say, hey, I owe this. I got collected that. My marriage, this and that. Just basic key things that are going to be important so we can get straight into like when we get on the phone, you don't really have to tell me all the way over again. You know what I'm saying? I can just read from it and say, okay, you do this, you don't do that. This is what I can do for you. I can help you do this and so on and so forth. I'm glad. Thank you for asking that question because I usually say that. His time. You're right, Gabe. His time is all the time. How am I go against that? Okay. All right. Since his time is all the time, so I'm gonna go in between 6 and 8. No, that's still part of all time. Oh crap. Yes, William. You know why? Let me tell you something. If you have a 401k loan out right now, for example, first of all, if you got a 401k loan, that's an indicator that tells me and people like me that you're in financial trouble because only people in financial trouble borrow from their future to pay for their present. Get what I said? Only people in financial trouble borrow from their future, your retirement, to pay for their present. Look how simple I put that. You see that? And I want you to think about it. Yeah, that makes sense because it is what it is. That's what it is. You must pay off that 401k loan. You must. Because if something happened to you, guess what's going to happen to you, okay? This is why they make it so easy. I'm gonna let you hear something. Listen to what I'm saying, William. All right? The things that make 401k loans sound attractive. Hey, no credit check. Now we're going to go back and forth. I'm going to say the simplest things so you can understand. Hey, there's no credit check. Of course there's no credit check because it's your money. Why would they do a credit check on your money? That doesn't make any sense. They say it to fool you. Hey, the rates are better than the bank rates. Of course they are. You're not borrowing the bank's money, so why would their rates be better than your rates? See, it doesn't make any sense, but it sounds good to people in the debt matrix. See how that works? It doesn't. And then if something happens to you, get laid off, you quit your job, something, right? That loan becomes due. If you don't pay it, it's counted as an early withdrawal. 10% penalty, and then they add that loan amount that you took out. They'll add it to your annual income, which pushes you up higher in the tax bracket, and then you're going to be paying almost 50% on that money. See how that works? Only people that don't know take chances like that. They're getting you good. They know you're in trouble if you're borrowing from your future to pay for your present. There's a problem. Figure out why you don't have the money for your present. That's it. Most people can't see that. 2 languages when it comes to money: debt and debt free. If you've been in debt all your life, you only speak debt. It doesn't matter how much money you make. It doesn't matter how smart you are. It doesn't matter. It doesn't matter. There's different levels in the debt matrix. There's the poor, the middle class, and the rich. They don't realize they're still in the debt matrix. It doesn't matter. It's just the same boat. Same boat. It doesn't matter. Notice I didn't say wealthy, because wealthy understand that the only most valuable thing in the world is the time in your life. That's it. Not even money touches that. You can't buy more time with money. See what I'm saying? That's how it works. You mentioned $240 a year for a phone. If you had paid off phone, I currently have Verizon and it paid off phone. Okay, this is what you do. Since you said Verizon, this one I'm gonna let you see. You go to redpocketmobile.com. or you go to totalwireless.com. Go check them out. Verizon phones. And try out straighttalk.com. You get to bring your phone to those places. You pick a plan. You pick a Verizon SIM, because you get your choice of what network you want to be with. But I advise going with your phone branded whatever, right? You get to choose. Say, oh, I want that plan, $240 a year. Yeah, they're going to say, what type of SIM do you want? You say, I want a Verizon SIM. Boom, you're done. Transfer your number, you're done. Yes, the service is the same. Nothing's different. The only thing is different that you're not paying the same price as the people in the debt matrix. That's it. Now, of course, if you can't do it, I can help you. But of course, that's a fee. I'm just telling you, I'm just pointing you guys to the right direction. But if you need assistance on how to do it, I'm going to have to charge you for that. I am. I'm not going to, but I can point you. If you can go there, check out the plans. They have instructions on how to do it. You must own your phone to even touch any one of those plans. If you're making payments on your phone, sorry, you can't do it. You can't do it. Once you're out of the debt matrix, you understand. Don't you ever finance a phone again, ever. Or tell anybody that you're financing a phone. Don't ever do that in public. Never say that out loud. Ever, 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 ever. Ever, ever, ever. Any other questions? Hey, this is what I want to ask you guys too. If you guys know any other finance people on YouTube or podcasts that are looking for guests, please give them my information. I need more. I want to get on and just tell more people. I want financial gurus to challenge what I'm saying. I want people to see it. I want them to see how those type of debates go, and check it out. Only thing I'm using, I come onto the stage, come into the arena with math on my side. That's it. That's it. I ain't worried about nothing. Nothing. Any other questions? If you guys know some people, please give them my name. I'm looking for more and more panels, more and more interviews, more and more guest shows to be on. I want you guys to see how this works. And then you guys sign up for a consultation with me and I bring you onto this other side. I want you to be part of the 15% of us that are free, baby. We are free. We are free as birds. Free, free, free. Life is not expensive. And you youngsters, oh, if I knew this at 20, hell, even 30, Gabe, you still there? Gabe, you still there? Look at DTN window cleaning. He's around your age. He's free. He's free, baby. And he's your age. He's your age. And he knows what I know. You guys are 20 years ahead of me. You're going to be rich. Oh, and people won't even know how you're doing it. Let me see. Thanks. Next, 856. I'm about 17 debt. And my friend said I should use avalanche debt method or should I pay it off by May? He has 15 cards. Well, this is what I say next. Put all your debts in order from smallest to the largest. Don't worry about interest rates. Don't worry about, I don't really know what, I believe avalanche goes by interest rate. Don't do that. This is why. Go by smallest to the largest for two reasons. Okay. It's easy. You take from the smallest. It's easier to start the small. And then once you pay off the smallest one, you have more money for the next one and more money for the next one. Not only monetarily you see it, but you psychologically see the debts disappearing. Okay. That's a major part. Trust me, it's important because people in the debt matrix, if you've been in debt all your life, you don't really realize how many due dates you got to keep track of. There's so many: cable bill, this credit card bill, that credit card bill, the mortgage payment, this and that, store payment due dates. You don't even really think about it. When you're financially free, you don't have no due dates. None. My rent is automatic. The only one I got to keep track of is my credit card because I always check my bill. I don't want to be paying for things that I didn't order or things show up. I just look. Okay, cool. And then I pay it in full every month. I pay it in full. Nothing's automatic. Any number that changes, like a debt that changes, like my electric bill or water bill, that it changes, it's not steady. I always want to look. I want to see. Okay, all right. I don't want them sneaking in stuff that I don't know because businesses do what they do. They're just business. They're designed to make money. That's what they're going to do. Not on me. I look. But those are the only things I have. I don't have due dates to keep track of. You guys don't realize how many you have. There's a lot of due dates. And the businesses know that you're not going to be able to do that. That's physically impossible. And they know that. So smallest to largest, looks like Dave Ramsey said, smallest to largest, don't worry about interest rate. Boom, 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 boom. After you do that, once you're free, guess what? You're no longer scared of your mailbox. You don't believe Freddy Krueger lives in your mailbox. I go to my mailbox. The only thing I know is going to be in there is junk mail or something that I ordered. Outside of that, nothing's going to be in there. Nothing. Or maybe the light bill or the water bill. But you know what I'm saying? Not things that keep me alive. Okay. No car notes, collection note letter, all that stuff. None of that stuff. Thank you, Ryan. Much appreciated. We need your rich in the red. That's the matrix. Is the red pill the one that helps? Is that the one that wakes them up and let them see the real, or the blue pill the one that keeps them asleep? Right? I can't remember. I can't remember which one did which, but yeah. I'm reaching the youngsters, man. I had a 19-year-old guy reach out to me the other day, man. 19. Looking forward to speaking with him. Man, that's going to be awesome. He's already 19. If I woke up at 19, okay. If I took the red pill at 19, oh man. But this is the catch-22. And this is a good thing for a 19-year-old, but now that I'm almost 50, hindsight is 2020, okay? If I took the red pill at 19, my whole life would have been different. The women I would have dated, the relationships I would have been in, the people that was around, it would have been totally different. I like right now, the woman I'm dating, check it out. I always tell the story so people understand what I'm saying. The woman I see right now, I've been seeing her for a couple of years. Guess what I asked her? The first thing I asked when we started dating, let me see your credit report. You know what she did? She was like, what you talking about? I was like, no, I'm serious. Let me see your credit report. She thought I was joking. I'm not joking. If you get with a fine woman and she's hundreds of thousands of dollars in student loan debt, that's sorry, we're wasting each other's time. I'm not going to pay for that much debt. I'm free. And if you're not even thinking about paying it off, oh no, we'll get to it. I won't. Oh no, sorry, we're going to be wasting each other's time. We can be friends. Oh, Linnell, you just think you're all that. I don't care what you think. This is math. I'm not talking about math. You're talking about feelings. I'm not talking about that. I have 4 credit cards. After paying them off, you are suggesting to keep just one. Yes, just keep one. 1 or 2. It's up to you. Keep the one with the highest balance or the highest limit. You know, you don't care about the interest rate and these are unsecured credit cards. I hope you're talking about unsecured credit cards. Never secured credit cards. Unsecured credit cards. Because you're never going to pay the interest anyway, because you're going to pay them in full every single month. Okay, you're going to pay, and this is what you do. You take the 1 or 2. I just have 1. Okay, I'm going to just use myself as an example. I use that to buy everything that I would normally buy: food, gas, shoes, pay the water bill, whatever, right? But that's money I was going to spend anyway. So that's going to increase my credit limit. And now I don't have to take a chance of getting my debit card hacked at some kind of store that takes their security, likely, you know, because getting your money back on a debit card versus a credit card, night and day difference. I'll never do that again. That happened once. I said, okay, cool, gotcha. And guess what up? Just check this out. When that happened to me, I called my bank and I said, hey, all you have to do, if I lost my debit card and somebody picks it up, all they got to do is go to the store, slide it, hit enter, and use it as a Visa. I said, that's a hole. I said, can you close that? Take that Visa and MasterCard logo off my debit card. I don't want that. You know what they told me? They said, no, we can't do that. I was like, what? You guys can clearly see that's a hole. I want that off. They're like, no, we got to deal with MasterCard and Visa. Gotcha. I won't be using it anywhere except pulling money out of the ATM. That's about it. Other than that, I don't use my debit card nowhere. Credit card everywhere. And at the same time, it builds my credit score. I don't really care about that. I just do that to show you guys what I've done with one credit card. I have no idea what my credit score is until I go look at it to show you guys to post my entire credit report on my Facebook site. That's it. I'll be like, oh, it went up. Oh, it went down. Oh, what it did. I don't care what it does. As long as it's good. It's good. I don't care. Other than that, whatever. It's a tool. No different than a hammer, nail gun, shovel, whatever. Thank you, Tony. Welcome. Thank you. Much appreciated. Can you speak on the myth of having several open cards and having the balance at 0 each month paid in full versus just one card? Okay, I'll tell you. Good questions, William. I like that. That's a bank trick. The banks are telling people that in the debt matrix. You know why they tell you that? Because one day you're going to have an emergency. They know it. They know you're going to have an emergency vacation, emergency tires, emergency stereo system, emergency lawnmower, and they know that. So that's why they say, hey, if you close, your credit score is going to go down. So it scares the people in the debt matrix to not closing them. Close them. You don't need them. Don't believe me? Go look at my credit report. I'm not just, check it out, William. Go to my Facebook, That Ain't My Daddy. Go look at my entire credit report, what I've done with one credit card. That alone should tell you what you're hearing is a myth, only to be believed by the people in the debt matrix. I'm not just talking. Go look. See what I'm saying? Don't close your credit card. You know your credit will go down if you close that credit card. Who said that? The banks are telling people that. Hey, you guys, I swear to you. I swear the stuff I read on the internet, I swear the banks are writing that stuff. I kid you not. I swear to God, they are writing that stuff. But they're rephrasing it into a way that it makes it sound good. Like, for example, FHA loans. Hey, check it out. Come get this loan. 3% 3.5% down. You don't have to have good credit. What they mean is saying you have bad credit. You don't have to have. They reword and say you have to have. Maybe you have less than perfect credit instead of saying bad credit. Less than perfect credit. No, that's for people that refuse to accept that they cannot afford a home. So they got a package for you, and they dress it up, make it sound good, put a bow on it, and people believe it. See what I'm saying? That's how it works. I use whatever gives me the most cash back whenever shopping on eBay and Amazon. It pays. Ryan. Woo, see all those funny terms? Look at all those good terms. Cash back. Nobody ever says cash back from where? You know what I'm saying? Hey, you listen what they're saying. Hey, if you use this credit card, we'll give you cash back. Nobody ever stopped to say cash back from what? From who? You mean instead of using my own money, use your card and I'll get cash back. Whatever. Now, I'm not knocking the cards if you're financially free. But if you're in debt, you're not getting cash back from anything. Add up all your saving. Add up all your debt. Savings minus debt equals how much money you have in real life. If your finances are in the negative, you're not getting cash back from anything. You just believe you are. Now, once you're financially free and you use that card and now you're getting airline points and miles and you're paying that card off in full every single month, yes, you're taking advantage of what they're saying. But the credit card companies understand that the majority of people are not doing that, nor do they know that. Do you understand? See what I'm saying? Best company get. Okay. Go on creditkarma.com. That shows you TransUnion and Equifax, and then Experian's off by themselves. Go to Experian.com. They're all free. Go look at your credit. Go look at your credit reports. Entirely free. Okay. Cool. Thank you, William. I have a friend who is considering looking for a home to buy, and she thinks FHA loans are okay. I told her, don't do it. Hey. Of course she thinks that. You know why? Because she doesn't have to hardly put any money down. You know why? Because she doesn't have any money to put down. This is what you ask people like that. First question, how much money are you putting down? How much money are you putting down? They're going to say, oh, FHA loans, you don't hardly have to put anything down. That's all the information you need to know. That's it. Nothing else. You don't say anything else, or else you're going to lose your friend. Because they already got their mind made up that that's what they're going to do, especially if the realtor has convinced them that FHA is way to go. Now, mind you, if there's a realtor or somebody pushing people, because they have rooms of conferences of getting people in big rooms and getting them FHA mortgages, I'm not against them doing what they do. This is business. How I feel about what they're doing to people, not doing to people, but selling them FHA loans, that is business. I'm not going to walk in a room and disrupt anybody's business. That means that'd be involving my feelings. Oh man, you guys shouldn't do that. That's mean. That's a feeling. Never mix your feelings with business. Now, when I see that personally, I do want to find out the person that's leading those classes. I would love to see their personal credit report because it would tell me one of two things. They don't know what they're saying, or they're doing it strictly for money because they do know what they're saying. Okay, there's two ways, and the only way I can tell is by seeing their personal credit report. It will tell me if they do know what they're saying, but they're out here just to make money. I get it. And if they're making money, I'm not gonna be like, oh, you're mean, you're bad. I'm not gonna say that. You're making money. Cool. Hey, more power. Could I personally do it? No, I couldn't personally do it. I couldn't write somebody up to a FHA loan knowing that they're never going to own that home, because that's the very reason why they got to get a FHA loan, because they can't afford a home. See what I'm saying? Nothing personal. Nothing personal. Any other questions? I'm loving these questions. I hope I'm answering them clearly. If I'm answering these questions and I'm saying something that is unclear, please ask specifically, because I want you to leave this channel fully understanding what I'm saying. And when I say fully understand what I'm saying, that the math makes sense. Okay? And if it angers you or you feel upset about it, I want you to feel that feeling. And I want you to say, this is what I want you to say to yourself. I know his math is right, but why am I upset about it? See what I'm saying? I want you to say that to yourself. Oh man, he don't know nothing about FHA loans, but his math is right. Why am I mad that his math is right? That's the only thing I want you guys. You repeat that to yourself. Savings minus debt equals how much money you have in real life. You want this freedom? You want this financial freedom that I'm sharing with you guys? It's not free. You want to know your price? Savings minus debt equals your price. You pay that price, you'll be free. That's it. Listen, I ain't nobody. I'm not special. Miss Cleaning Smith, my 5th grade teacher taught me this. I just didn't use it. In your opinion, should I focus on becoming debt-free before buying rental property? Alex Steele, good question. Very good question, okay? This is what I want you to do. Add up all your savings. Add up all your debt. Savings minus debt equals how much money you have for rental property. So you tell me, are you ready for rental property? Add up all your savings. Add up all your debt. Yes, including your student loans. Yes, including collections. Yes, I'm not saying that you have it. Yes, including mortgage. And then you tell me, are you ready for rental property? That's it. That's it. See, I'm not doing nothing special. I'm not doing anything special. So you tell me. Hey, Wild Tiger, guess what? I found out from a 6th grader, the math that I'm using right now, he learned that in 2nd and 3rd grade. Sorry. I didn't know how to take that. I didn't know if to be happy or mad, sad. I didn't know. But he's like, Dad, that math he's using, I learned that in the 2nd and 3rd grade. Maybe it was the 5th for us. I'm assuming that was the 5th. That's what I remember. I remember I was in grade school. I do know that part, okay? Any other questions? I'm here for you. Hey, you guys that have reached out to me, I don't know. I must have came through on Sunday for people because I got a lot of calls on Sunday. I couldn't believe it. I was like, damn, what's up with Sunday? So why you leave your career IT? I'll tell you 2 jobs. Once I became financially free, I realized how much in IT specifically, not even my last job, in IT specifically, how much of my time I was letting them take from me for free. I was, look at it this way. I was a tier 3 type of computer engineer. I had on-call rotations, but yet I got called all the time when I wasn't on call. I had to answer emails. I had to answer my phone all the time to answer blah, blah, blah. Those were not in my contract to give away my time for free. I signed up. Hey, Linnell, you're going to be here from 8 to 5. These are your hours. And that's that. That's all they said they were going to pay me for. But yet I was doing outside of that. Once I got out of debt, I could see that clearly and I couldn't tolerate it no more. So I no longer fit in the IT world. It's really that simple. It's really just that simple. So I had to quit. I had no choice. Something came to me like this 2 jobs. Hey, it's time for you to go. That's the best way I can explain it. And then I left. Never looked back. Now I just help people. Help people feel the freedom. SR, is it really pretty simple? Make a budget and look at your own numbers. That tells all the truth. Yes. All you got to do is trust math. Take all your debts. Put them from smallest to the largest. Okay? Smallest to the largest. And then you pay off the one, the smallest in full. Pay on the lowest one, the heaviest, while you're paying minimums on the rest. Pay off that one. Now you have more money for the next one. Same thing. So by the time you get to the last one, you're pretty much using your whole check to pay off the biggest one. That thing is gone like that. You'll be free forever. You'll be free for the rest of your life. These few years you're going to take the sacrifice, you're going to have to sacrifice not listening to people in the debt matrix because they're going to think you're crazy. They're going to think, hey, why'd you go from an Escalade down to a Honda? Why'd you move from a 5-bedroom house to a 1-bedroom apartment? Why'd you do that? They're going to think you're down on your luck, thinking you're sad, you're a bum, you must have did something wrong, your credit's bad, whatever. It doesn't matter what they think. They don't know why you're doing it because they can't hear you. Nope, not ready. Hey, Alex, you see that? I want you to see that. That's how simple it is. That's how simple it is. I'm saying it's just that simple to Alex. Oh, okay. What's up, Randall? How you doing? I have FHLM, but I have a tenant. Next, 856. Without knowing the details of your loan, I'm just saying like this. FHA mortgages are for people that don't know. Okay? If you knew the type of fees that you had associated with that type of mortgage, there's no way in hell you would have got that mortgage. I promise you, you wouldn't have done that. I'm saying Get with somebody that knows it's a realtor person. Get that financed out of that FHA loan into a traditional conventional mortgage, and make sure that house is classified under the IRS as a rental. Okay? That's just tidbits of information. I'm not a professional. You take that information to your professional, and your professional person in that area will know exactly why you're asking that question. I promise you. Okay? I got soon to see him live. Thank you, Randall. Appreciate it. Let's hear your thoughts on it. Oh, Wild Tiger. I just read about installment loans. Oh my God. Ooh. That was to read on that. That's just another. It's just they're taking the payday loan stations out in the area where you could drive up to, and they're just putting it online. That's all they're doing. But instead of payday loans, you know, you got to flip back in 2 weeks. You got to pay it back. They're stretching them bad boys out to 60 months. And I saw a 35% interest rate. Only people that are in the debt matrix with bad credit, no money, are the only people that would even sign up for online installment loans, the installation loans, installment loans, whatever you want to call it. Only people that don't know would ever. I wouldn't touch that with a 10-foot pole. Heck, no. Would I invest in that? I would feel, from what I teach, I guess that would be adding my feelings into it. Would I invest in something like that? I mean, it would be ideal. Don't get me wrong. It's money. You take your feelings about how, because it's all a choice. You got to remember, if you saw me invest in a company that gave installment loans, you would probably think, oh, Linnell, you're a hypocrite. No, I'm not. Everything is a choice. You can choose to believe math or not. It's your choice. Everybody has this ability. You don't even have to know math. There's calculator apps on your phones. You don't even have to know math. See how it is? That's entering your personal feelings. Now, morally, I probably couldn't do it because I would feel bad about the people doing it, because I know they're in financial trouble. That's why you're even doing installment loans. The budget makes dealing with debt a mindless activity. You just follow the numbers. Just follow numbers. It is mindless. If you just go, okay, this is what I'm going to do. You pay it. Once you're on it, once you start rolling and you start seeing those debts disappear, and you notice that, you'll start to notice every time you go to your mailbox, you're not really afraid to go, and there's not much stuff in it anymore. There's not many stacks of mail. Like I'm gonna give you guys some hints. If you got stacks of unopened mail at your house, you're in financial trouble. If you got stacks, you know those 401k letters, they always mail you home that what your stock is doing. You got stacks of those unopened, you're in financial trouble. That's why those are indicators to tell you you're living in a debt matrix. You're part of the collective. Seems like exploration working for most businesses need to find a better means of allowing my money to work. You know what, Ryan? You get out of debt. You will look at a job for what it is, to make money. It's not there to make friends. It's not to be kissing the boss's butt. It's not to be. You're there to make money. They hired you for a specific purpose. If you're good at what you do, you go there and you do what you've been hired to do at the hours they agreed to pay you for. That's it. You don't give nothing outside of that. Like right now, I wouldn't be able to fit back in IT because I wouldn't allow half the stuff I'd let them get away with. I would not allow that. No, you can't call me when I'm not on call. No, you can't do that. I would have a separate phone. I always say this. I used to use my phone, my personal phone, for them to call me for business and stuff like that. If I got back into IT, I would have a total separate phone. If I'm not on call, I'm not bringing that phone home. There's no reason for me to bring that phone home. They didn't pay me for that. They're not paying me for that. And nobody gets my time for free. Never again, because I said this so many times to my kids when they were growing up, when they were young. Oh, man, I'll make this time up to you. I got to work. Knowing I was sitting there lying to my kids because that time is gone forever. There's no way in the world I can make that time up because of I got to work, because of this car note, because of this jewelry, because of these shoes. I would never do that again. The time in my life is the most valuable thing on earth. It's so obvious to me today. So obvious. Okay, hey, I got the money back from the bank, $500. Oh, cool, Randall. I'm so glad you followed through on that, man. Oh, man. Oh, now put that money on some debt and get $500 more out of debt and stop letting the bank make. who knows how much money they made off your $500, man. I hate to tell you that. They probably made a lot of money off your $500. Now pay that debt off so they can't make no more money and let other people stop making interest money on your money. FHA requires payment through the length of the loan. You are right, SR. You are right, SR. You are right. Guess what? They have 2 PMIs. One in the beginning when you sign the papers of a FHA loan, and then they got one through the entire 30 years of the loan. And people think private mortgage insurance, they hear the word insurance. Private mortgage insurance, it sounds fancy. It sounds like it's for the person signing the papers. It has nothing to do with the person buying the house, nothing. It's all for the bank. It's insurance for the bank because they know anybody with a FHA mortgage is high risk. They should rename private mortgage insurance PMI to PFI, prepaid foreclosure insurance. So when something happens and this person loses the house with the FHA mortgage, and they say, the people in debt matrix say things like this. Only people like this talk like this, okay? Oh, it's going to take them a year to get me out. They just can't kick me out. They got to do this and that. You've paid for all that. You paid for the processing, the lawyers, the cops that are going to come kick you out. You've paid for all that through PMI. They already knew the probability of you doing that is high, so they taxed you in the very beginning. Only you don't know that. If you have an FHA mortgage, you are the only one that doesn't know that. When you got turned down for a conventional mortgage, even if you have even ever tried, if you ever tried for a conventional mortgage and you got turned down, that's the bank indirectly telling you that you cannot afford a home. Now, they're not going to say, hey, you can't get this loan because you can't afford a home. They wouldn't be making no money, so they're going to push you to FHA mortgages, all right? They're not in the business of teaching people about money. They're in the business of making money. Nothing personal. I wouldn't touch a FHA. Let me just say it like this next. I wouldn't touch a FHA mortgage. I wouldn't touch it. There's plenty of people that do it for business. I carry the same habits I would from my personal life into business. Now, when you cross over to business, loans are good. That's a different kind of debt. Not personal debt, business debt. I go over to business, I'm going to get the best possible loan for whatever business property I'm going to acquire. Everything's the same. You learn it right here. You treat your personal finances like a business. You'll carry those same habits over to business. I promise you. So you come over here, you're not going to start slipping up from not being over here. You're going to be like, oh, no, I got the best rate on my home mortgage. I'm going to do the same thing on this business building or whatever you're trying to get. Same thing. Same thing. What's up, Linnell? All strong, all around strong. Hello. Only that I have a house and student loan. I'm more confused on investing instead of trying to pay off these debts. Good question. All right. Let me make that easy for you. Welcome to my channel. This is going to be so simple. It's going to make your head spin. Okay. You ready? You got a pencil and paper? Add up all your savings. Add up all your debt. Yes, including your mortgage and your student loans. Savings minus debt equals how much money you have for investing. Now you tell me, are you ready to invest? Bam, just like that. Look at that. I'm not even. See that? All around strong. Do you see what I did? Add up all your savings. Add up all your debt. Yes, including your mortgage and your student loan. Yes. Okay. Now, that's how much money you have for investing. Liquid savings or portfolio. Okay, another good question. In your I'm just talking liquid savings. Now, in your portfolio, do you own this? Do you own all this stuff in your portfolio? If you do not include that. If you don't own it, don't include that in your portfolio for the mathematical equation I'm saying. Like, for example, some people have, hey, I have equity in my house. Do you own the house? No, then it's not your equity until you own it. That's why you have to borrow the say like you wanted the money, you have to borrow the equity at a percentage rate because it's not your money. Do you have to borrow money from your savings account at a percentage rate? No, because that's your money. See what I'm saying? See how easy? Look how easy I'm making this. I swear to God, I'm no genius. Don't confuse yourself. Don't confuse yourself with all that other stuff. All around. Oh, was that? Oh, wait, no, that was SR. Investing while you're still in debt is a waste of time. It makes no mathematical sense. And if it doesn't make mathematical sense, it doesn't make financial sense either. The only thing, math and money are one. Check it out. SR, all around strong. Math and money are one. The only thing that can separate these two are feelings. Feelings are the only thing that can separate math and money. It's like this. Check it out. How do you feel about 1 + 1 = 2? Does it make you happy? Does it make you sad? Does it make you toss and turn all night? No, it's just 2. What if I were your boss? All around strong, SR. What if I was your boss? I gave you a check and it was $100 short. And you said, hey, Linnell, what's up with my check? It's $100 short. And I turned to you and said, you know what? I saw that when I was signing a check. I feel real bad about that. I really do. I felt so bad that you were $100 short. Does that make sense? That's exactly what you do when you invest when you have no money. You just feel like you're investing. You're not investing because you literally have no money. So you just feel like you are. See how easy I made that sound? Interest debt will most likely outweigh the interest on your investments, making it. You know what, SR? It just makes it so complicated. You know, these fancy guru investors, they confuse people in a debt matrix. Hey, yeah, you know, you take this, don't pay off your student loan. You take this, invest in that, and then you get this interest from this and that, and then you take it over, and then you pay off your student loan. And here's the person that don't know nothing about money. They're going, what? Okay, what? Huh? What about what? Huh? Then all you got to do, and when you go to an investor and he says like this is what I want you guys to do. I want you to add up all your debt before you go see your investor that talks like this, right? You walk in the room, you say, hey, what should I do? Give them your scenario, whatever. And before they start, you say, hey, man, I added up all my debt and this is my debt, and give it to them. And then let them talk their whole spiel. Hey, invest in this, take that portfolio, liquidate that, and then that adds up in the interest over this, and then you pay it on, and then you go like this. Hey, if I'm in debt, how am I supposed to invest in the things you just told me about? That's mathematically impossible, right? Yeah. Then why are you telling me that? I don't get it. That's how you say it. Make them try to make sense of what they just said. They can't, because math says that's not true. You cannot, it's mathematically impossible to earn interest from negative dollars. There is no money to invest when you have none. That's mathematically impossible. Now, what I'm saying, all you got to do is believe it. That's all you got to do. Hey, should I invest? Savings minus debt equals how much money you have to invest. If it's in the negative, the answer is no. First thing for our answer question, though, my home and student loans are very low interest rate, where my investments are looking very nice. Doesn't math point to higher? It doesn't. You believe, check it out, all around strong. You believe the money that's making money is your money. That's what you believe. You believe it's your money. You're indirectly, check it out, all around strong. You're indirectly investing for the bank. Now follow what I'm saying here. Add up all your savings, add up all your debt. Savings minus debt equals how much money you have to invest. If that number is in the negative, you have to actually borrow money to invest in these investments that you're talking about. You physically have to borrow money because you have no money. If your finances are in the negative, you have to borrow the money from some entity, some bank. Why? Because math is saying that. So whatever's growing in investment and doing this stuff, you're doing it for the bank. You're not doing it for you. You just feel like you are. See what I'm saying? You just feel like you are. On top of that, I get tax benefits on interest of paying home and student loans. See? Okay, all around strong. I want you to hear what you're saying. You're speaking debt. Now, and I hope you don't get offended by that, because I'm just saying math, okay? You're speaking like as if the collective part of the debt matrix, okay? You're paying, okay, let me say this. Tax benefits on interest and paying home. You're paying the interest. You're paying on, you're happy about not paying the interest on something that you don't have to have in the first place. So you're happy with having a tax benefit of the interest of something that you don't have to have student loans. You don't have to have a mortgage. So who cares about the interest? You're not really saving anything, because in order for you to pay the mortgage, in order for you to make student loan payments, you only can pay that with after-tax money, your net income, money that has already been taxed once. So you don't even know, you're not even paying with the whole dollar when you make payments. You've already been taxed. Now they're making interest, and now you're happy that you get to knock off some of the interest that they're making on something that you don't even have to have in the first place. Do you understand what I'm saying? That's the best way I can explain that. See, you see that? See how? And I want you to feel what I'm saying. Okay, I don't want you to think I'm saying it sarcastically. I say it the way I say it because I want you to feel what I'm saying. I want you to think back and say, yeah, that does make sense. Wait a minute. I'm happy to knock off interest of something that I don't even have to have in the first place. And the reason why I say that, because that was me. I was happy to take the interest off my taxes for the student loan interest. I was happy. Totally. Now that I'm out of the debt matrix, I didn't even have to have the student loan in the first place. That's how. But again, all around strong. When you come out of the debt matrix, we need people to keep thinking like that. That's how us are going to remain rich, remain financially free, remain comfortable, because we need people to believe that kind of stuff. Whoever designed the system, I'm kidding you not, you guys, somebody designed this. You better believe it. Somebody designed it. Somebody did. And they are brilliant. I know one day I'm going to get a call from somebody. I'm going to go up a level on you guys. I know somebody that knows what I know, that's high up wherever they're at. They're going to see my videos. They're going to know that I know. And they're going to bring me on. They're going to bring me somewhere. They're going to tell me some stuff that's probably going to blow my mind even more than what I know today. Okay, thank you, man. I appreciate that all around strong. Much appreciated. I just want to make sure. Why the Wall Street bankers say the 401k is for suckers. I think it's the banks that say that, honestly. I swear to you guys, the news is controlled, okay? It's not, they just can't come on and say whatever they want to say. They say the things that they need to tell you guys to make you believe it. Check it out. When you're outside the debt matrix, check it out. 401k is the best thing ever to give you practice when you come on the business side. You know why? This is why. $19,000 a year you can put in your 401k. $19,000. Now, mind you, if you're in debt, you can't do this. $19,000 in your 401k. Number one, $19,000 in your retirement. Number two, the interest earned on that retirement. Number three, you get to take that same $19,000 off of your annual income, which lowers you in your tax bracket, which means you pay less in taxes. So the people that have to stay here up high in their tax bracket because they're in debt, and you that can lower your tax bracket, the money saved in here, that's money in your pocket. The taxes you avoid that the majority pay is money in your pocket. Not tax evasion, tax avoidance. You got me? That's how people in the debt matrix can't see that. That's called phantom income. Phantom income is only phantom to people that are in debt. Why? Because it's mathematically impossible for them to see it. See how you see I'm just making this connect like a damn puzzle? See it? It's just like a link in a chain. I'm not saying anything fancy. I swear to you guys, I'm not. I'm not this big guru. I'm just using the math I learned in grade school. Miss Klingensmith. She taught me. I got gold stars by my name. That's it. Great message. God bless, brother. Thank you, Jonathan. Appreciate it. Oh, good. How soon you talking about, Jonathan? How soon? We talking a year, 2 years? Hey, SR. Listen what you're saying, though, SR. It's not a lie. They're not lying. They're not doing anything. Because if you just use the math, You can clearly see that it's just reworded. Words are used. Words are, when it comes to money, you define every single word used when it's used in conjunction with money. Like homeowner. Millions of people with mortgages believe they're homeowners, and they say it every day, when math will clearly show that they're not. See what I'm saying? You're not a homeowner. You have to pay off that home to be a homeowner. You know that, right? That's not true. They'll argue with you. See what I'm saying? That's it. Thank you, all around strong. Thank you. And by the way, let me put in a little intro. 30-minute consultation, free, at DebtAintMyDaddy@gmail.com. Schedule your 30-minute free consultation. I'll change your life. I promise. I'll change your life and teach you along the way. Everything I teach you, you can punch in your own numbers in your own calculator to make sure I'm not trying to fool you. Use your own hand. Your numbers will match my numbers. That easy. Don't forget to like this video. Don't forget to subscribe. Hit the reminder button. Share who's ready to hear it. Hey, again, I want to reiterate this. If you know other financial rooms, channels that like to bring on guests, please suggest me to them. Podcasts, anything. I'm just ready to spread this freedom. Thank you all around strong, man. I want to make sure that people understand this. It doesn't matter your occupation. Lawyer, doctor, surgeon, accountant, tax person, IRS agent, engineer, lawn care person, pizza delivery guy, Uber driver. It doesn't matter. It doesn't matter. Don't think it's like, for example, I saw the news today. The average median income is $33,000, $35,000. The first thing the majority of people in debt matrix thinks that's poverty. That's not poverty. If you're not in debt, I promise you, that's not poverty. It's only poverty to those who are in debt. You get out of debt, you will see how easy it is to live on $35,000 a year. Easy. Yes, I can teach you that, but you got to get out of debt first. That's life after debt. Okay. First, you got to get out of debt to understand what I'm saying about living 30. Because when I say that to people, the first thing they're going to think, oh, you must live like a bum. You must got a house on Skid Row. You must drive a piece of crap. No, none of that. That's just debt talk. There's nothing like that. Nothing. Don't believe the hype. Don't do it. That's the news telling you that. That's just the news. The news will trick. I don't even watch the news. I don't even watch the news. It drives me crazy. It's like you listen to the news. They'll talk about a puppy and then something in your neighborhood, and then they'll go out of the country and then tell you about something terrible about the economy, a murder, and then they start it all over again. Oh, puppy, this and that, and they just do it all over and they just keep doing it. I can't take that anymore. Can't take it. That's good. Thank you, SR. Thank you for even saying that. Hey, man, I appreciate that. Much appreciated. Hey, there's so, man. Hey, you guys, I want to tell you. I want to show you. This is my passion. Look at my videos. Look how many videos I have on this. Look how many videos. I've been making videos. I have been making money for a long time. I just had to keep putting out content. And then I knew some people are going to start to hear it and be like, wait a minute. I've never heard this on YouTube before. But this guy says this. It sounds so confusing, but he makes it so simple. I learned from Dave Ramsey, but even at Dave Ramsey, a lot of people still really don't understand what he's saying. I'm not saying he's not explaining it right. I'm not saying he's not good at what he do. I'm saying when I learned from him, I knew I could take it a step even more simpler than that. I'm slowly, for those of you that follow me, this is what I'm going to be doing so you guys understand. My main channel is Debt Ain't My Daddy, right? And most people can look at that name and think, Oh man, who is he? That ain't my daddy either. What you talking about? Debt is this, and there's good debt, bad debt, whatever, right? It's too much of a name that can be controversial. So this is what I'm gonna slowly migrate to. Savings minus debt. That's it. That's it. Saving, the master mathematical formula that will change your financial life forever. All you gotta do is believe it. That's it. It's undeniable. Undeniable. How do I know if I'm ready to invest? Savings minus debt equals how much money you have to invest. Is it in a negative? Yeah, then no. I need to know if I have enough money for a new car. Saving minus debt equals how much money you have for a new car. Is it in a negative? Yeah, then the answer is no. See how simple that is? It's that simple. Dave is the best, but people have to understand what he is. The why has to. Yeah, exactly. They don't really understand that you got to get sick and tired of being sick and tired. It appears to be for people who have no control over their finances. I listen to his point. Yeah, he's really and all around strong. That's a general, because I talk to people that have no control over their finances either, but they're starting to wake up and realize they don't have control over their finances, but they believe it's complicated to get under. I'm trying to change the mindset of people that believe that debt is just part of life. Everybody has debt. Everybody has car notes. Everybody has student loan payments. That's not true. Only people in a debt matrix have that kind of stuff. There's people like us, 85% of people are in debt. There's 15% of us that are financially free. Financially free doesn't mean you're rich. It means your finances are at zero and above. That means you don't owe anybody on earth a dime. Listen to what I'm saying. I don't owe anybody on earth a dime. I owe nobody any money. Nobody. I'm not talking about the things that keep me alive. Like, not the things that I will die without. Food. If I don't buy food, I'll die. If I don't have shelter, I'll die. Will I die if I don't have a Cadillac Escalade car payment? No, I won't die. Will I die if I don't have a Rolex watch? Nope, I won't die. See what I'm saying? That's the difference. I'm not even saying not buy that kind of stuff. You want a Rolex? Yeah. You go buy your Rolex from somebody that's in credit trouble, that got himself over his head, that needs to sell. Then that you take your cash that you have now because you're financially free and you say, here, I want that watch, but I'm only going to pay you a quarter of the price for it. Guess what? They're going to take it because people in the debt matrix worship money. When you're outside the debt matrix, you clearly see that money is simply a tool, nothing more. Nothing, no, I won't kill for it. I won't steal for it. I won't scam somebody for it. I won't take somebody's life savings because I want that. No, that's for people in the debt matrix that worship money. It's a tool. Nothing more than that. Nothing. I don't even listen, you guys. Not only do I not owe nobody a dime on earth, I don't even think about money. I don't even think about money. I don't even think about it. Of course, I think about it when people buy my program. I say, hey, look, here's the price. But when I'm saying not think about it, is I'm not going throughout my day talking about, oh my God, I need to get this money together for this. I need to pay that. No, I don't think about none of that. There's no reason to. None. Any other questions? Thank you for all you guys for participating. Much appreciated. Free 30-minute consultation. DebtAintMyDaddy@gmail.com. Schedule yours. Absolutely free. We'll get on the phone. What I need you to do, if you want a consultation, what I need you to do is email a date and a time and a brief overview of your financial situation. So when we get on the phone, we can get straight to it. Okay. I give 30 minutes because I really want people to get out what they're telling me so I can translate it. All right. This was fun. I do almost every day, SR. Every day, every other day. It all counts on when it hits me. Like if I see something on the news or I hear something, man, like my friend, he sent me a thing on installment loans. I was all over that. I'm gonna still make a separate video of that, but man, that is just the stuff I see. It just blows me away. It just blows me away. Okay, great, man. I hope, hey, SR, hit that reminder button so you can get that ding. All right. Like a Rolex, you get your money back if it's plain Jane. Hey, that's what I'm saying, Randall. Ain't nothing wrong with a gold Rolex, but don't buy it from the store. You buy it from somebody in credit trouble. People in debt have no choice but to buy things full price because they have no money. So they have to charge it. They have to pay all the taxes and everything. They have to pay all that. Let them pay all that stuff in. That stuff that Rolex said that's what you got to pay. We don't agree with what Rolex says. I don't care. But if you still want that watch, you buy it for a quarter the price from somebody that's getting ready to get a divorce. He might be in tax trouble. Student loans will get him. Who cares? It doesn't matter. But there's a million excuses out there, a million reasons. That's when you come back and say, here, this is how much I'm going to give to you. Guess what? They're going to take it because they worship and need money. That's it. Nothing personal. Nothing personal. Any other questions? Any other questions? Any other questions before I get off here? I don't want to leave anybody hanging. I don't want you to leave confused. Like this video. If it's very informative, like it. Leave a comment. Don't forget to click that donation link under every single video. If you like what I say, it doesn't matter the amount. Please make sure you put in a note when you do the donation. Let me know why you're donating to me, because those things from perfect strangers telling me how I've changed their life, I want to know that. That's what keeps me going. I promise you. Wild Tiger. You know how I feel about that. Let me put it this way. All right, Wild Tiger, this is what I feel. This is what, let me put it this way. Say like the United States was your country. You founded the United States and you invented the dollar. And you put in hard work to make everybody in your country use this money and the only money they're going to use. You created a force to say, hey, if you make copies of this money that I made, I'm going to put your ass in prison if you do that. You structured this whole thing. You think you're going to let some outside entity come up with some made up money and make your money invalid? There's no way you're going to let that happen. There's no way. At least not in this lifetime. And everybody in this room, for that to happen and take over the regular dollar, that's never going to happen as long as we're alive. That's never going to happen. No, it's not. Now, when you're outside the debt matrix, and you have a ton of people believing that, because a lot of people think it's just fast money and they're just going to do this and that, whatever, right? And you're outside the debt matrix and you can see it for what it is, you would invest in a different way to make money from the people that believe that's real money. You understand what I'm saying? And then the IRS is going to get their cut, because when those people in there, they make this fast money, they have to convert it back to cash. And when they do, 9 times out of 10, they're not going to be paying their taxes. Guess what? IRS is going to come knocking on their door. Hey, you cashed out about $50,000 worth of cryptocurrency. Where's our cut? Huh? What? Huh? What? That's not going to happen. Remember that ring I told you about? This lady was trying to get it for $350. I got it for, but I was trying to sell it for $750. I'm like, I like a grand left to pay. Oh God. Oh yeah, I do remember that. I remember that ring I told you about, the lady. Man, but I was trying to sell it for oh gotcha. Go sell it for $750. I have like a grand left to pay. I believe you're saying, are you saying that you got it? Maybe I'm not reading that right. Remember that ring I told you about, the lady was trying to get it for $350, and I got it for $1,000, 1.4K, 1,000. Trying to sell it for $750. I'm not quite understanding what you're saying. I don't really look at cryptocurrency for investment. I kind of was looking at it for the future. Yeah. I mean, I don't really look at it. I don't look at cryptocurrency, honestly. You know what, Wild Tiger, I really don't even look at it. I don't pay attention to it. I don't. I mean, when it first came out and it was jumping up to 20,000 and all this other stuff, I I almost got into it, but I was getting sucked in and being part of the collective. I had to unplug. And then once I unplugged, I was like, oh shoot, now I see it for what it is. I mean, for me, selling it for $750, knowing I owe $1,000. Oh, gotcha. Selling for less is a good price. I felt like I paid it off. Yeah, ain't nothing wrong with that. Pay it, man. Go ahead and eat what you need to eat to get out of debt. Okay, you see it for what it is. You took a loss, take a hit, whatever. And when you get out of debt, you're gonna take a lot of hits. Okay, because you're paying off things that are not even worth the price that you're paying on. It's going to happen. That's all. Let me tell you like this, Randall. That's all part of the process to feel what you did. The reason why it's important to feel what you did, it's going to prevent you from ever doing that nonsense again, ever. For nobody, for love, nothing, nobody. If you believe in the Bible, Wild Tiger, future wise, we're going to be chipping you. You will still owe $650. You sell it, lady. Is that the best deal? Probably not. Yeah, I mean, are you saying, Randall? You saying you're still paying on that ring? I believe you're saying that. Cashless society. Okay, Wild Tiger, this is what I say. I don't use cash hardly anywhere. Okay, so I do see it going that way. I don't, but I believe businesses are making a cashless society in a different way. I believe they're doing it because if you don't see it leave your hand, there's a disconnect. Like if you had $100 in your hand and you went to go spend it and buy things, there's something about you taking that money out of your hand and dropping it on the table and seeing it being taken away and looking in your hand, and now you have less. You see what I'm saying? There's some emotional connection, but if they can disconnect that emotional attachment to actual physical money, to money that's just on a computer screen or on a credit card or as credit or as this and that, you have a less of an attachment to it. That's financially free mind thinking. I think that is brilliant to disconnect that emotion from it. Once you disconnect that emotion from it, people start to believe it's really not their money. Who cares? I'll get it back. But when it's cash, for some reason you go, man, if I buy that $20 XYZ, I'm only going to have 80. Is that thing really worth $20? You'll start to think, do I really need that? Or do I just want that thing? No, I'll pick it up later. Or you'll say something like that, right? Just, man. Oh man, $60 a month. Oof. Try to get the highest. Yeah, plus interest. Ooh, plus that interest. Yeah. Plus interest. Get mad at that interest. Interest is the hemorrhaging. Interest causes hemorrhaging in your bank account. See what I'm saying? It just drains your bank account and you don't even know. Just man, check this out. Here's a better analogy. Check it out. Imagine you're on a very small raft in the middle of the Atlantic Ocean. Okay, you're on a small raft, and the sea. You just imagine you're in the sea and you can't see anything for miles. Right? Imagine the sea is debt. And the raft is your job. Okay. Now, when they say J over B, just over broke, the raft is your job. You're supported by your job. You're just over broke. That's the only thing keeping you afloat. If that raft pops, you sink into the sea of debt. That's where JOB comes from. So when you start financing things that have interest, you're putting more and more stuff in your boat, in your inflatable little raft, and it's sinking you deeper and deeper and deeper. And you don't know you are, because it's slowly adding water into your raft. The interest is slowly. See how I'm doing that? That's what it means. That is real. Pretty much paid it off, bro. Interest is stupid. I didn't. Interest. Now, when you come on the other side, interest is not stupid when it's interest making on your money. You'll love interest there when you're earning it, not spending it. See what I'm saying? On this side, oh, interest is lovely. Interest is your friend. Interest is not good or bad. You make interest good or bad. If you choose to make it bad, that's on you. See what I'm saying? That's how it works. I didn't know what interest at the last. They break it down. She was trying to just make her commission. Hey, and Randall, ain't nothing wrong with that. She's out to make money. It's business. Don't take it personal. When you come on this side, you'll understand, and you won't take things like that personal. They're just out to make money. You're gonna buy your cars from a person that's in trouble, no matter what reason they're in trouble, job loss, divorce, whatever. That's none of your business. That you don't care why they're doing it. You're out to just buy something for the less. Blue book value of vehicles no longer matter to you. That doesn't matter. That's only for people in debt. She's probably stuck in debt needing. Exactly. I can tell the people that are in debt selling stuff. It's not hard. No, I bought it from the key jewelry shop. I see through the bullshit. Hey, Randall, again, it's not, when you come on this side, it's just math. Don't even say BS. That's a feeling. That's just, they just can't see it. Whatever. They're not fooling anybody. They're just saying, hey, when people take advantage of it, they think somebody's taking advantage of other people. No, it's just math. You're going to use math? I'm using math right here. That's why I'm going to make the most money. You're not using math? Okay, that's on you. That's nothing personal. Hey, Randall, no, sometimes, you don't really hear me cuss a lot. But when you hear me say a cuss word, it's specifically, and when you say the bullshit, right? That's okay. Okay. Because you're not saying it just to be cussing. That's an expression of how you feel inside about the mistake you made. Because that's important. When you see that, and you be like, man, for example, when you finance a car, right? People that finance cars don't realize that they're financing taxes too. So they go buy the car adds up with tax and all the other stuff that the dealership throws in there. But the main point is this: that includes tax. They wrap it up in a bundle, and then they charge 29% on top of that price for the next 72 months. They're financing taxes. Now, people don't even like having taxes, but people are financing them too. Don't ever do that. If you're financing a car and you're telling people you're making car payments, I want you to stop saying that. Stop telling people you're doing that. Stop telling people you got a good interest rate on your car. Stop saying that. Because you don't know if people like me are around you listening to you. Because when I hear that, they go, oh shit, yeah, that person's in the debt matrix. They're part of the collective. The Borg, just like on Star Trek, the collective. They don't know. Exactly, Randall. Randall, you only buy your cars from people in debt trouble, in credit trouble, in debt that need the money. And don't be fooled like you think you're going to get a junker. No, it doesn't matter who's selling it. It doesn't matter. And the cost to make the loan, the paperwork, all that. The banks, when you hear people say, oh, the banks are big and mean, they're so angry, those are feelings. I watch the banks. I pay attention to the banks. If you watch them, they have this game on lock. Okay, this game is on lock. Pay attention to the banks. You want to see how they do it? All you got to do, watch a bank commercial. When a bank commercial comes on TV, put it on mute. You'll clearly see how they're doing it. Car commercials, put car commercials on mute. You'll see how they're selling cars. Same thing with medicine commercials. Every time one of those medicine commercials come on that you don't even know the name of it when they even tell you, put it on mute. See how they're selling you the medicine. You don't even have to go to school for advertising. All you gotta do is watch TV, put the commercials on mute, and you will learn how the pros do it. Just that simple. So your financing advice is different than 7 steps. 7 steps of what? Of who? Of who all around strong? Seven baby steps are extremely simplified to get you to think of them. Well, the 7 baby steps are to get you out of debt. Nothing to do with financing. Yeah, nothing to do with, you said, so your financial advice is different than the 7 steps. No, the 7 steps get you out of debt. It has nothing to do with financing. Nothing. So if you take your emotions out of the equation, the truth. Yes, you never put your emotions in with your money, ever do that. Just like I always say, hey, SR, how do you feel about 1 + 1 = 2? What about 5 + 5 = 10? Does that bother you? Does it make you angry? Does it make you angry that 5 + 5 = 10? Does it make you want to drive off the road and wreck your car? Man, I can't believe it equals 10. Man, oh man, I want to beat somebody up. See, that's how it sounds. That's how it sounds. Don't ever do that. That's what it's outside the debt matrix. I kid you not. That's what it sounds like. Person receiving the message. It is what, right. It is what it is to the person receiving. True. That's true, SR. Okay. Whatever their emotions are you just got to go, okay. Like people that want to finance cars, they know not to ask me because they don't want to hear that. Their minds are already set on financing a car. I have close friends that have had their student loans for 15 years. And they buy a new car with cash. Oh, man, hey, L, yeah, I got this car, man, but I paid cash. I want to say, no, you didn't. I say, do you still have that student loan? Yeah, then you didn't pay cash for it. You just believe you paid cash for it. They don't know that. I have close friends. We don't even talk about what I do because we won't be friends anymore. So we agreed to stop talking. They want to live in the debt matrix. Who am I to tell them no? Who am I to tell them that they are bad for doing it? We need people to believe that stuff. That's the only way we are going to stay free. Those of us that are financially free. That's the only way we're going to stay rich. The only way we're going to make money. That's the only way our business is going to be successful, for people to remain asleep in the debt matrix, to remain part of the collective, the average, the Borg. Else it wouldn't work. We need people to finance cars, clothes, shoes, washer and dryers. I'm just looking around my kitchen, blenders, fryers, mixers, pots and pans, glasses, stove, refrigerator, lights, clocks, pictures. We need them all to finance that stuff in order for us to remain free. I'm going to be on you every time you go live. You're writing a book. You know what, Randall? And I want you to do that too. I don't take that negative. I say, you know what? They keep doing. Okay. Hey, you guys, I'm about to wrap this up. I've been on here for like almost 2 hours. Okay. I'm taking up. I have everybody be quiet when I'm on video, and I gotta get off. Thank you all, you guys, for coming. I appreciate it. I'm gonna wrap this up. Remember, free 30-minute consultation at DebtAintMyDaddy@gmail.com. Don't forget to hit that donation button. Put in a note of how I'm changing your life, what I've done, even if I don't know, anything. All right. Thank you. Thank you, SR, all around strong, Randall, everybody for participating. Wild. Appreciate it all. You guys have a wonderful, wonderful evening. All right. Bye-bye.